folks, I'm Melly Little, and this is your daily TA wrap, where we take a look at these markets, and we do it from a neoclassical perspective each time, asking ourselves what happened today, and what does it tell us about tomorrow. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time, here from the base of the Rocky Mountains. Glad you could join me. Another day of up. What can we say, folks? It just keeps happening. Last night we talked about 2 things to watch. To give you a clue as to what to do today, one was this test that was taking place on the NASDAQ on the composite. You know, if it were to break out and start to leg higher, that of course would mean more continuation, not only for it, but for the other indexes as well. That was one of the keys. The other key was the Russell. And these are broad indexes, right? Russell small caps, 2,000 stocks. Russell also was testing, trying to get over these highs. Actually was over those highs, but the question was, could it leg away and get up to the next one? And if it started to, it'd probably go right, magnetized to it, and that's exactly what it did. 1164.77 where it was trying to get to, got to 1161.48 on the close. 62 was the high. That one's going to test it tomorrow. So again, the continuation, the stretch, whatever you want to call it, it's still in place. So tomorrow, this is the test. Can it get over this and leg up and hit the highs again? And the other test will, of course, be on the SPX. If we come over and look at the SPX, what did it do? Well, it's up here testing that last anchor bar resistance. This is really basically it. It gets over this, all it has is a couple swing point highs. It'll probably take those out. So the question is, can it get over to 1842.29 was the number. It got over it, back underneath it, closes under it, fails on price, on volume. Have we heard that before? Yeah, we've heard it before. We've heard it, I think, every day last week, and it didn't matter. Will it matter this time? Well, it's pretty hard to say, yeah, it's going to be different this time when every other time it hasn't. So, you know, jury's out, but these will be the 2 tomorrow. The Russell, testing of that 2-3 points higher. S&P trying to get over this and leg up to the highs. Of course, S&P still is in a range trade, but you got the NASDAQ over the highs. You had the index over the NDX over the highs. This will be the last of the 3, or actually the second of the majors to get over those highs, if in fact it can break out and start to leg higher. Folks, common sense tells you this thing is stretched, right? I mean, we don't have to look at oscillators. We don't have to look at stochastics. We don't have to look at anything. I mean, when you go up 8, 9, 10 days in a row, that's stretched. I mean, there's not much else to say about it. And so it's clear that this thing should pull back. But so far it hasn't, and when will it? Well, that's a good question. Let's go over and look at the closing quotes. We actually had the Dow down today, 24 points, 16,130. The S&P's tacked on 2. We had the NASDAQ up big, 0.68%, 26.75 higher, 42.72 3/4. NDX was up 15.5. The big winner, of course, was the Russell, percent higher, 12.25 almost, 1161.48, almost 50. Gold was up again today, but just barely sold off towards the end. Oil was up big. Everything was up big in the commodities with the exception of gold. Gold was up a bit. The dollar was down slightly. So the press into anything that, not so much an inflation hedge, but the idea that inflation is coming seems to still be the trade out here. It doesn't matter if it's commodities. It doesn't matter really what it is. People have no place to put their money to gain any kind of return. And no matter the fact that this thing continues to go up on a daily basis, they just keep putting money into the market, I guess on the expectation that it never will come down again. All right, so indexes, that's really it. I mean, if we could pop over and look at the Dow as well. The Dow is really just coming up and testing this area, and it's kind of struggling. It actually went over and under, had more volume though. It's testing into that big bar. That's the 24th, 1224, which I believe is actually the same on the Russell. All right, let's look at the, I want to go over to the Ox markets first. And when I say everything was moving today, I mean, I'm going to go even into the bonds. The bonds were walking higher as well today, although they sold off towards the end of the day when the market wouldn't come down. You know, this structure here, there's no volume on this push up. You can see it came back up into here with nothing. That looks to me like it's going to try to test lower again. If this tests lower, that's typically good for the market. So again, the bonds are not dissuading the market in any way. They're certainly not moving up in terms of price. You know, well, they're not moving anywhere. They're going 6-7 days sideways here. Right here, you had bonds push up, interest rates down. That was kind of a fear trade. The fear trade was going on when the market was selling off. Now it's pulled back and it's just going sideways. And as it does that, that allows this market to continue to do what it's been doing, and that is just to work itself higher. On the dollar front, the dollar has been pulling back. Today pulls back a little bit more. It's into that swing point low. Doesn't have any volume down here comparatively. Dollar should bounce from here. Of course, should is the operative word everywhere. I mean, these were ABCD structures on the way down, and they look like they've just about completed. I drew that wrong. Let's do it again. So if we go from here to there, back up, and then down again, you know, it's not quite completed, but it's just about there. So you're coming into the lows. You're pretty much done on your ABCD structures. That also should do a bounce. And if you look at it on the weekly, there's a lot of volume down here on this bar on the weekly as well. If we look over at the gold market, the market that won't give it up, the market that nobody would buy for a year and a half, and that now everybody wants to buy, goes over the highs of Friday. 127.38 was the high on Friday. You go over it, you stay over it by 2 pennies. This thing can actually walk a little bit higher if it wants to. There's nothing stopping it still. And if you look at it on the weekly, we've looked over there before. There's really nothing to force it back down yet. So gold continues to show, you know, that it could go a little bit higher. The one to watch though is silver. Silver is the one that's been making the run. Another big spike up today. When I see this kind of stuff in the cheaper of the two, it makes me think that the speculative fever is very high, right? I mean, you don't, when gold won't move yet silver moves like this, that's telling you speculation is running rampant in this sector. And that's usually not a good sign, because you're going to get some sort of a bad reversal off of this. So silver spikes up again. That's 2 days of spike. Let me see, 1980 to 21. So you tacked on almost 10% in 2 days. That looks a little bit excessive. Of course, everything looks a little excessive right now. Municipal bonds. I don't think anything's happening there. Let's take a quick peek. We haven't looked in a while. Nothing really. You know, there's just no fear. There's really no fear of anything now. We had the Bank of Japan come out. If we go over and look at the Nikkei, we had the Bank of Japan come out, double their lending. Actually, the thing that was more important than the doubling of the size of their lending program was that they stretched it out in terms of time. I think it was 1 to 3 years. Or I think it was 1 to 3, and now it's 4. So you know, they give them more time to borrow and hold the money if they want to, without having to pay it back. And that is the banks I'm talking about. Let me pop over to the world markets. So the Nikkei got about a 3% jump off of that as a result of it. And you know, I don't know what they're doing tonight. I hadn't looked yet, but I suspect some sort of a little give back after that big push. Here we go. Let's see what the chart looks like. So Nikkei 25, yeah, it went right up to the highs, pushed it with volume 2. That's an ABCD structure. So let's see here. Yeah, it takes it up to this swing point. So they may get a little bit of back off this B point as they try to get over tonight, but it looks to me like it's going to break through here and get back up, test these swing point lows. So the first one, let's see what these numbers. I don't know if I did this last night. That's 15,020, and it didn't test into it last time. So yeah, so the first, if I do the, if I'm thinking about it from a retest regenerate standpoint, that regeneration is off of this bar, the first one, right? And that's usually the best one to measure against, because if you get through that, then that says you didn't regenerate lower, and that takes it right up to about the top of it. It looks like that ABCD structure. So that price point is 15,163. This one is 15,143. That looks to me where it's trying to get to, right up to the top of that. Nikkei. So Nikkei, and what's interesting is the Nikkei has been kind of out of step with everybody else. While everybody else was kind of starting to make a move, the Nikkei couldn't. Now it gets its spike off the Bank of Japan news and is trying to work itself back higher, where the rest of the markets are kind of in pause mode. Almost reminds me of the way the Dow did that time last September, where everything else moved up and then just kind of hung there until the Dow got through coming all the way back up, and then they all fell together. I was going to quickly look through some of these and see if there's anything, because there's really nothing in the sectors. So Taiwan's just testing into resistance. Korea still testing into resistance, swing point high. That one, I believe I said last night, that one looks like it's going to try to go higher. Let me see what Hong Kong looks like. So Hong Kong actually was down last night and then pushed higher. No volume as they're coming up here. They're coming into their retest regens right now. So that price point, the top bottom is 22,567 to 22,757, and they're into it now. So this is the retest regen. This is where you find out if the sellers are going to step up or not, and that is the area. Let me look at the rest of the emerging markets while I'm here. So like the main ones, Brazil, because so Brazil is still hurting. They're going after the lows again. They're coming down with volume again, and that's a fairly large weighting in the most of the emerging market indexes and ETFs. India is another large one. India's got a little ABCD structure. It's not big, but it's there. You can see, the price point. Draw it out and see what it looks like. Looks to go about there. Yeah, there's really nothing there. All you have is this slow. So India actually is probably going to get a bigger push than expected here, it looks like to me. Maybe to this range right here. That's about where that ABCD structure projects. And that would be the gap area where it came down pretty hard. So yeah. So India looks to go higher. So Brazil trying to come back. Hang Seng in the retest regen, probably going to have some difficulty there. India working higher. Those are the main ones. I'm trying to think if there are others. Those are probably the main ones. That and Korea. All right, so let's go over to the sectors. The only two in here, most of these, well, there's two or three things of interest, but other than that, most of these were, kind of moribund. iShares of the IYT can't get going, right? And maybe this is travel related to all the weather. I mean, it seems like everything's blamed on the weather now. We might as well blame this on the weather. But the transports can't get going. The one that is going and can't quit going is the healthcare. Today we saw Forest Labs, a buyout, up 30%, fairly major size company. Fairly large. I mean, it's like a $30 billion deal. It wasn't small. XLV breaks out, right? Just stretches higher and actually had volume come into it today as it pushed up. So you're getting pretty good movement here. Now, on the flip side of that, you got things like, say, the XLE, which actually have an ABCD structure, which most of these don't have. Most all of them are straight up V shapes. And the ABCD structure here is to this price point. And so you can actually get some projections off of some of these, but most of them don't have it. So this one looks to be going after the swing point high. You have some resistance here, but after that it's the highs again. But if I look at most of these, there are no structures other than the left side of the chart, and so far that's proved to be impotent in terms of stopping anything. Right? There's no ABCD structures. This is just straight up moves. And so you're coming into retest regens. This is on the financials. You're coming into a retest regen here. You got the high off the breakdown bar. That's the top of that low. That looks to be where this one's trying to get to. Volume just tapering off, right? But the volume doesn't matter until you get to something to test, and then it only matters if it fails, right? If it just climbs over it like it does, it doesn't matter how small it is. It's still going up until there's something that stops it. And so far there hasn't been anything. It doesn't matter. I think, when you get to a point like this, it really just comes down to common sense, right? It's I can always make the argument that this thing should fall. I can also make the argument that it will continue up. I mean, we just saw the Bank of Japan with their liquidity measures. We saw news out of Europe with the Bundesbank and the German government suggesting that the operations of the ECB could actually be non-sterile. In other words, they don't actually drain liquidity when they push it on one side. So, and that's worth probably $200 billion or something. So, I mean, you keep seeing things that allow, the arguments to be made, we can continue to go up. Because so much of this has been about the banks, easy credit, cheap credit, right, and forcing you into risky assets. And that has been, the biggest story. Now, it's true that corporations have made profits, but if you look at the profits, I mean, historically, they're like at, near all-time highs in terms of real monies that they've made, in terms of the both as compared to the GDP and as compared to the size of the organization. So it's not as if things are cheap, right, in terms of how much money they can make. I mean, unless you're going to grow as a corporation, unless you're going to grow in size and sell more stuff, you can't keep creating higher multiples. Right? It just doesn't happen. And so, when you look at it from that perspective, it's like, okay, if they can't grow the top line, which isn't happening, and we keep seeing economic numbers that suggest that maybe things aren't as good, but we keep saying it's because of the weather, you can argue both sides of this. And right now, common sense says, this is not where you chase stuff. You wait, you just be patient, you let it come back in, and when it comes back in, then you put some exposure on. It's just the way it is. You can't. I guarantee you chase stuff up here, you're going to end up with stuff you don't want. So, let's see what I got here. I don't have much else. Let's see if you guys have any questions. Let's see if anybody emailed anything, because I could beat this to death and not tell you anything more. I've probably said as much as I can say about the markets. Oh, I did want to look real quick. Oh, I see a question over here. I'll get right to you, Fred. Hang on. I wanted to look at the European markets and see what they did last night, because the European markets were the markets I thought would have trouble last night. So here's the DAX, and yeah, they kind of stagnated there. Well, at least this one actually went sideways. Every time else we've had these failure setups that should go sideways to down, they actually go up. So the DAX did what it's supposed to. That's something I haven't said recently. Here's the FTSE, yeah, and it went right up there where we thought it might, because it was going after that high. So the FTSE trades into the bottom of this big bar, 6,800, and yeah, closes just underneath it. So it goes into it, has pretty good volume, 8.2 going into 10, right? But that's probably going to cause it to stagnate here. It's got an ABCD structure. It's going to take it to the highs though before it's over. Let's see what the CAX is. And the CAX. Yeah, so this one gets over, tests the highs, fails at the highs. That should pull back. That's exactly what it did. So, you know, maybe there's some sane markets still left in Europe. Elsewhere, I don't see it most of the time. Well, domestically, I don't see it, probably is the way I should say it. All right, let's see what Fred's got here. So, good evening. I had a good run on PCLN. Earnings soon on Thursday. Does the chart on the technicals give any indication to you about where it will move after earnings? And Fred reminds me not to hold back. Fred's a member, and you know, he doesn't want me to hold back and tell him what I really think here. And I always tell you what I think. I try to couch it in nice language usually, but all right, let me get up the. Let's flip this to the weekly first. So PCLN is like up $20 a day every day, it seems like. And so we had a high. All right, so that high had 2.1. You go over it with 4. You fail, you come back, and you break out with 4. Okay, so I can't see anything on the weekly that looks bad. And on the monthly, other than the fact that there's no volume, there's really nothing different there. That looks fine. So on the daily, so we had, okay, so you don't really have, like everything, like most things in this market right now, you have no ABCD structure, so you don't have projections from those standpoints. Really, you just have the left side of the chart, and in this case, you don't have a left side of the chart. It's already broken out. So then that leaves you with ranges. And I think the more common range would be about there. So what is that? That's about, let's see what the price points are. That's roughly, let's use this bottom, is 11.13, and we'll use that top. So that's, you know, that's 90 points or so. So if we tack 90 onto that, that's 1296, 1300. You're at it. So, you know, I think you got the majority of what you're going to get here. And you know, again, if I come back to this whole idea of common sense, you just went from 1100 to 13. Am I reading that right? Is that really that? It's 11 and a quarter to 13. It's almost 200. So you went up 17% into earnings, or something near that. You know, I don't know, 15, 16, 17. I don't know. It's a big number, and you did it in 8 bars. Excuse me, 9 bars. You got to take some money off here. You got to bag some of this money. I mean, maybe the earnings come out and they blow it away and they sky a little bit more, but then I'm almost certain they're going to sell it after that. So you got to take some of the money here. And, you know, if they come down, you buy some more again. If they sky up, then you sell the rest of it or something. You got to take some money for it. You know, I can't. There's nothing here that tells me it's going to fail other than the fact that it's already stretched to where it should go. And you've done it in a lightning fashion in front of earnings. So they are definitely discounting good earnings. You know, is the way that looks to me. Okay. You know, folks, tomorrow, what is tomorrow? Wednesday. We got a shortened week this week. You know, it's hard to say to sell anything. You know, and I'm sitting here telling Fred that he should sell some of this. But as a market stretches, you know, depending on what you've got on, you know, percentage-wise, you gotta nip some of it off unless you're underinvested. And what I mean by that, and in this particular case, it's a little bit different. But I mean, if we just go to the broad index, right? And if you're really underinvested, then maybe you don't take anything off, and you're simply looking to buy on the dip. But if you've got a decent investment size, right, as you stretch like this day after day after day, you know, common sense says this thing's going to pull back here at some point. You know, you don't know where, and I'm not suggesting you short it. I'm just suggesting that you take some of the money, stick it in your pocket, right, unless you're just totally uninvested. And you wait for a better price to put some of it back on. And that could be true in individual stocks. You know, I was looking at this stock today, which I happen to own, and I took some off on it. Right? I mean, folks, you don't get these kinds of runs day after day after day, and then they continue for another week or two. Right? You can do a doji up here at the top. You really don't have much volume. Right? That's a heck of a stretch. You know, just like over there, this is a 15% move in 2 weeks. You got to take some of that money off. You're going to get a pullback. You buy it back. And if you don't, even if this stretch is higher, the odds of it pulling back to let you, you know, here's the thing most people don't think about, and I'll shut up after this. If you get this kind of stretch, right, you got to expect it's going to come back. You got a wide price spread bar here, somewhere into this bar, right? So you're going to pick up a 2 or 3%. Let's just say it stretches even more. What are the odds that this thing's going to eventually come back at least to where you got out? I think they're pretty darn good at this point. Like, I'm talking about 95% or probably. So when you get that kind of a stretch, you got to take some of the money off and just expect that at some point it's going to at least let you get back in. If you're wrong where you take it off after this stretch, right? More than likely you're going to get it cheaper. And that's where you make your money. You don't make it holding it, because eventually they're going to take it away, even in a market like this one. So, folks, have yourself a great night. Take care of yourself, and I'll see you next time. I'm LA. This was your daily TA wrap. Have a great night. Good night.